How difficult is it to make sense of what is happening in DCA and ultimately what it means for you, B?
Well, DC's politics is pretty hard to understand at the moment, and the machinations or lack of them can be really quite confusing to investors. Certainly at Jensen, we prefer companies that we can see understand the transparency of the business models and frankly can, within reason, determine their own destinies without actually relying on politics in DC.
Is it time to de-risk? And if so, why?
We think so. Investors have to remember that this is now one of the third longest economic expansions in the US since 1900. Markets are hitting all-time highs, volatility is low, and certainly we're seeing with our investors a rebalancing of capital appreciation with the desire for capital preservation. So given where we are in the economic cycle and some pretty lofty expectations in EPS, I think a note of caution is warranted.
Ultimately, why do the three things that you picked out matter? The fact that this is one of the longest expansions, the fact that we are at a record high. Why are those things so significant?
I think it's been a really extraordinary period since 2007, 2008. Where we think we're going to be going forward is earnings expectations with the S&P 500 for the next 12 months are 20%. EPS for the S&P 500 over the last 5 and 10 years has been 2%. There seems to be a lot of hope built into the market at the moment as the Fed eases off, and again, a note of caution probably warranted at this stage.
Where do you de-risk?
We at Jensen like to focus on high-quality companies, those companies with demonstrable track records, strong competitive advantages, strong return on equities, companies that within reason can manage their own destinies, that tend to be number one or two in their various industries and have real competitive advantages and strong free cash flow.
That sounds